game last night. I was not watching.
Good afternoon, everybody. It's Jeff Jenkins and Eric Clayman here again for our weekly Facebook Live presentation. Do it every Thursday at 2 o'clock, generally, unless one of us is, on vacation or something like that.
Meeting with clients, speaking to a judge.
Yeah, whatever. Today we're going to talk about a couple of things, but the first one we wanted to talk about was loan modifications versus refinancing your loan. The interest rates they're coming back up again, but they were very, very low. And they're still a lot lower than you might have on your mortgage loan. If you refinance, Eric, do you want to talk about that?
Sure, let's both talk about it. Hi, everybody. And Jeff's talking about your mortgage, and many people, as a result of COVID, as a result of what's happened to our economy, have fallen behind with their mortgages. And one way to catch up is to refinance, because although people have fallen behind with their mortgages, generally in New Jersey, certainly in the areas of New Jersey that we cover from, let's say, Middlesex County down, home prices have gone up quite a bit.
Mm-hmm.
So you may have equity in your home, which is good, but you're behind with your mortgage payment, which is bad. So that's an unusual situation where you're building equity and you're behind with your mortgage. So how do you cure that? One way to cure it is to do a traditional refinance.
Mm-hmm.
Contact a mortgage company, your mortgage company, or any other mortgage company, and try to recast the loan. The problem with that is that if you are behind with your mortgage, it's difficult to get credit.
That would be difficult to refinance. A mortgage company is not going to be banging down your door to refinance your loan when they see that you're 12 or 14 months behind.
Or even a couple, right? And if they do, the interest rates that you see advertised may not be available to you.
Right, exactly.
So we have a refinance is expensive. It always is. There's points. There's sometimes attorney's fees, closing costs, title insurance. It's expensive. It costs. Now, a lot of times they say, we're going to put it into the loan so you won't.
Yeah, and
but it's expensive.
You might have to set up another property tax escrow, a property insurance escrow, and pay 1 or 3 months worth of property taxes up front and some money toward the property insurance up front. So it can become a kind of expensive process.
So we have an alternative, and we're not talking bankruptcy right now, but we have an alternative for you, which is contacting your mortgage company and asking typically for what they call their loss mitigation department, and talk to them about what's called a loan modification. Now, Jeff, you and I have been in business a long time helping people who are behind with their mortgages. Mm-hmm. But I would say in the last 2 or 3 years, we've helped more clients with loan modification in the last 3 years than we did in the previous 20 years.
Yeah,
it's a recent phenomenon.
Yeah, exactly. That's right. I mean, 25 years ago, if you called up a mortgage company and said, look, I'd like to kind of recast my loan. My interest rate's kind of high. I'd like it lower. I'd like my payments lower. They'd laugh at you. You wouldn't get anywhere with them. But I guess after 2008, when there were so many defaults, we started to see this loan modification thing pop up, and it was a big thing for a while. I think it's been kind of going down the hill, although with COVID and all the forbearance agreements that may have been entered into, or the delinquencies that have built up, it becomes a viable option again, and something to think about.
Right, and that's a very interesting point you're bringing up, Jeff. At first, I think we were leaning towards people who are behind with their mortgage and have not spoken to their mortgage company about what to do. We have many clients and many of our neighbors and friends and colleagues who have already spoken to their mortgage companies and have received forbearance agreements. Now, a forbearance agreement is just that, an agreement between the mortgage holder and the consumer or the residential owner of the real estate, or any owner of real estate who has a mortgage. So it's an agreement between the mortgagee and the mortgagor that the missed mortgage payments will be not forgiven, but it will not be an event of default. And then there has to be a negotiation as to what to do with these payments in forbearance, about what to do about these missed mortgage payments.
Mhm.
And Jeff, the mortgage companies are clear, they think. They're saying these missed payments are not being forgiven.
No,
So,
they're not.
so what are being done? There's a bunch of
Well,
things being done,
yeah,
right?
yeah, that's right. A lot of the governmental insured mortgages are saying, are allowing the mortgage companies with those types of loans to simply place the forbearance amount for a particular loan on the end of the loan. So if we have somebody who's behind 12 months and the COVID business is over with, and you go to the mortgage company and say, what can we do? They might say, look, we're just going to put it on the end of the loan, period. Um, Other mortgage companies, and this is, may say, we want you to apply to our loss mitigation department and request a loan modification. And with a loan modification, they're going to take whatever you owe, be it back payments, escrow money for property taxes or insurance, going to take everything that you owe, put into one piece, and have a new loan, probably with a reduced interest rate and probably with an extended term. The term of the loan is probably going to be longer than what it was formerly. And they're doing those things, reducing the interest rate and extending the term of the loan to try to keep your payments where they are, or maybe even a little bit less, so that it's affordable to you. I mean, the thought here is these mortgage companies are not set up to acquire 10 million properties and sell them. You know,
And that's just in New Jersey.
right. So they're trying to come up with other ways to get you to start making payments again, because that's how they make money. You're making payments each month. You've got a loan at interest. And so that's what they're trying to accomplish with a loan modification. And unlike refinancing, you don't have all these charges. It's just the mortgage company simply redoing the loan, making a new mortgage loan.
But Jeff, we've also had clients who can do neither.
That's true.
They get rejected for, well, refinance isn't applicable because, as we talked about, if you're behind with your loan, your credit report may be hurt, maybe down. You just can't get a regular refinance. And the mortgage company, either because you're not familiar with the process or because you just don't qualify under their guidelines, which are kind of random. So what do you do if you're behind with your mortgage and you want to save your home? You have to consider home. That's like from that HBO movie. They make fun of people who talk like that. Anyway, if you want to save your home, you want to at least consider filing bankruptcy. And right before you speak, I do want to make this observation. People who are behind with their home mortgage payments are generally have many other bills, because you don't fall behind with your mortgage unless you have to. So you probably have credit card debts, medical bills, driving related bills, and all sorts of other things. So sometimes just a loan modification doesn't do enough for you anyway. So
Right.
that's when talking to a bankruptcy attorney is something to really consider.
Yeah, you should. And there was a time when I felt that just based on our clients coming in and talking to us, it seemed that doing a Chapter 13 would actually help them get a loan modification. I mean, really and truly, I'm not just saying that. And like we had some swimming pool clients, if you'll recall, who'd been turned down like 3 times for a loan modification, and they came to see us, and like 2-3 weeks later they had one, because they were and maybe it's because the mortgage company doesn't want to fiddle around with the Chapter 13. I don't know. They don't want to pay attorneys to get involved and all that kind of stuff.
And there's a seriousness involved when consumers call us and file bankruptcy. It's not as if the person is just dealing with a mortgage company. Now they have lawyers on their side.
Right.
And that's often why these things settle
Yeah.
more favorably.
And when these loan modifications first came out, we saw them quickly become pretty successful the majority of the time when people applied for them. And as time went on, we've seen that kind of decline. Although now with the COVID situation and so many people behind in their loans, I really think that the loan modifications are going to be accepted in many, many cases by a mortgage company, but they don't have to do that. They don't. So is there something else that they could do, Eric, if they can't get a loan modification? Can't refinance?
They can file bankruptcy, right? If that's the case, if seriously you're not filing bankruptcy and you can't refinance and you can't do a loan modification, if you've been blessed with appreciation on your home, then I guess selling your home is something you can consider.
Sure.
I mean, that's and buying a smaller home or renting for 2 years, get your credit back in gear. Jeff, maybe we should take a short break just from our agenda to talk about that. How filing bankruptcy is not good for your credit score, but we have a way around that, don't we?
Absolutely. We do business with a company who will repair your credit score. If you do a Chapter 7, after you get a discharge.
About 4 months after you file bankruptcy.
Right,
Okay, that's what we're
exactly,
talking about.
one way or the other. After a Chapter 13, when your confirmation is confirmed,
Plan is confirmed.
Plan is confirmed, then we can give your name to these folks that we work with, and they will work with you to increase your credit score. And they're very, very good. They probably handle close to 100,000 people that company has. I mean, that's what they do.
And Jeff, we pay for that, right?
Yeah, I make payments every month to them. Thanks for reminding me, that's another bill. But we're doing it so that our clients can get their credit score back up. And so when you get to the point where we can do that with you, either at the end of a Chapter 7 or after your plan is confirmed in a Chapter 13, it's not going to cost you a dime. That's our deal with this company. We pay them monthly, and we're paying them so that you can deal with them for free and get your credit repaired. And generally, they're very good about being able to do that.
Jeff, I've referred dozens of people to them, and I haven't had anyone ever call me back and say, "Why did you do that? Hey, that didn't work."
Yeah.
I mean, I can't say every single client calls back and says thanks, but you're permitted if you want to call that and say thanks, you can. But no complaints about them at all. It's just you get stuff done.
The guy who runs the company, Phil Tyrone, is his name, is very, very good. And he calls it 7 steps to 720. He's trying to get your credit score up to 720. And his program lasts for like 10 to 12 months. He'll send you emails each month and have you do certain things each month to fix your credit report. And he's very, very specific about what he wants you to do. And generally, this process is very successful. So don't think that if you go to a bankruptcy, your credit's ruined forever and ever.
That's why when Jeff asked me that last question, well, what do you do if you can't get a refinance, you can't get a loan modification, you're behind with your mortgage, you don't want to file bankruptcy? Your credit score is something that moves, and we can help you make it move up. Don't resist filing bankruptcy just because of a credit score concern, because if you're behind with the mortgage, don't file bankruptcy and don't use this program we're talking to you about. Your credit score will most likely, not assuredly, but most likely be lower than your neighbor who also has fallen behind with his mortgage, but chooses to file bankruptcy and then runs through this program.
Mm-hmm.
So you're really hurting yourself on any number of levels. Remember, the bankruptcy case helps you in 2 ways. Number one, the moment you file bankruptcy, you're protected by what's called the automatic stay, which stays or stops all collection actions. No phone calls, letters, threats, wage garnishments, tax sales, repossessions, foreclosures is all stopped. And number two, you obtain what's called a discharge of your debts. And that means you won't owe the people any more money forever, the creditors any more money, even though you won't be paying them back necessarily anything, or if you do, it'll probably be just a small amount.
Right. And if you're listening to us, you remember that we are bankruptcy attorneys and we do have a bankruptcy firm. So we generally talk about bankruptcy when we talk about things. Actually, if you're behind with your mortgage, maybe you've had a forbearance with the mortgage company and they're not going to do anything for you to fix this amount that you owe. If you owe other things, or even if you don't, you might want to talk to a bankruptcy attorney. It's not a bad idea. The CARES Act and the legislation that's come after that has allowed us to extend the Chapter 13 plan to 84 months. Formerly, it was 60 months was the maximum time. So now we've got 7 years instead of 5. And while paying mortgage arrears back over 5 years might be onerous for you, it might be difficult because of the amount of the payment you have to make each month, adding 2 more years to the plan is going to lessen the payment and might make it affordable.
Right. There's many, many people who come in to see us and they don't know how they can save their house, but they know they want to save their house. And what Jeff is explaining is that we have more tools in our toolbox now than we used to.
Right.
And that's great.
Exactly.
Jeff, what about, should we talk a little bit about people who don't own their homes, but evictions, or did you want to talk about people who are behind with utilities?
Yeah, let's talk about utilities first.
Because that's a group of people that have been calling us a lot. So that's a
Yeah.
good idea.
Yeah. You know that there's been a moratorium on utility shutoffs, and that started as something that was voluntary by the utility companies. And it may still be that way, but I don't know if the governor got involved and one of his orders said you can't shut utilities off. Certainly he did, I think, for the cable and telecom industry. But any moratorium on utility shutoffs for water, sewer, cable, or whatever
Electric.
is supposed to end on June 30th. And today is June 10th. So 20 days from now, that's going to come to an end. And the utility companies are supposed to set up a payment plan for you, which may be affordable according to what they work up, and it may not. And you may have other things, other debts that you're behind on that need consideration. If we do a bankruptcy, Eric, what's going to happen with the utilities?
And again, I think the way you set this up was right, Jeff. Most people don't come in here because they have one Jersey City power and light bill for $1,100. That's not enough reason to file bankruptcy. But most people who file bankruptcy are also behind with their utilities.
Right.
The key to a successful bankruptcy is to include all the bills. Let Jeff and I tell you not to include a bill. Bring it all in, clean it up. So with utilities, we include the utility bill in the bankruptcy. We have contacts with every utility company collection department in New Jersey. We call them, we either fax or scan over an email to them, proof that you're in bankruptcy, and the bill becomes zero. Now, they were permitted before COVID, they were allowed to ask for security deposits. I guess after June 30th, they're going to be able to ask for security deposits? Unclear.
I would think so, but during COVID, if they were going to start your utilities again, there was not a security deposit requirement. In fact, they weren't supposed to charge security deposits.
So let's assume it's typically security deposit is very affordable and something that we help negotiate if necessary. Basically, it becomes a new account. Your old account, if you owe South Jersey Gas $1,750, your next bill will show zero. Your name might have different lettering or something like that. There's something different, and it's a completely different account number. Jeff, it's a great fresh start. You file bankruptcy, you don't owe the utility company any more money, and they have to keep the service on. That's such a relief for people who come to see us, who have so much going on, and to worry about having, well, it's been 90 degrees every day this week, not having electricity in 20 days, not having heat in the winter, not having water. It's such a relief to file bankruptcy.
It certainly is. And like we mention all the time, it's not just one thing that we can get rid of. And generally, when people come in to see us to talk about filing bankruptcy, there's more than one thing that's delinquent. And so the bankruptcy can do wonders for all the other debts generally. You know, most of the time, if you come in to see us, almost all the time, I should say, we're going to be able to take care of all your financial problems by filing a bankruptcy, one type or another.
Jeff, both you and I have used the same shorthand today, and I just want to be clear on it. When we say when you come in and see us, of course, it's 2021. So we will gladly see you in the office. In fact, this very office that you're looking at right now is my office. But we also can see you from the safety and comfort of your home. We're set up completely online with a DocuSign type system called Panda Docs, and with all sorts of phone and computer communication, state of the art, and it's all secure. So if you are not comfortable coming into our office, or quite frankly, you're working full time and don't want to come to our office, and that's something we used to not deal with really, but now we've been
Right.
now with our enhanced technology, we can see you from the safety and comfort of your home any day of the week. Just give us a call at that number below.
We can, and that could go just for a consultation. You might call up, and I'm happy to talk to you on the phone. And you're at home, and we're here. We can put your picture on the screen or not. That's up to you. You can talk to one of our paralegals, or you can come in here and talk to us.
Right. The first call might be a call, and then you might want to just come in and see us.
Right.
And we're all set up for you. And it really does work. We've gone over today some of our real like meat and potato type people who need to file bankruptcy.
Mm-hmm.
Behind with their mortgage, giving you some options. You can try a loan modification, you can try a refinance, you can try to sell your house, or you can file bankruptcy. And then we're getting many calls from people as this moratorium is over with utility shutoffs. What are they going to do? Again, the moratorium on utility shutoffs was not forgiveness of the utility bill.
Right.
So they still owe money.
And nor were any of the moratoriums, whether it's rent, mortgage payments, utilities. It's still, the debt's still there.
And that's what we're here for, to
Right.
make sure that that goes away.
That's
And
right.
you get a fresh start and you feel so much better. And as we talked about in the middle of today's episode, and if you're concerned about your credit score, we'll help you with that too.
Yep. At no charge. Just as that's our gift to you to get you back on the right track. So I think we're okay for today, Eric. We'll
This
talk
was a good
about
one.
evictions next week and maybe some other things. So until next week, Thursday at 2:00, goodbye and God bless.